Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
Is it your feeling that the yen will strengthen against the U.S. versus the U.S. dollar? That's from Paul. No, we think the yen is going to weaken against the U.S. dollar. In the near term, if we see a major risk event, one of these events, the yen could be supported and actually move a little better than the U.S. dollar. But ultimately, if we get through these problems, these three problems, or even if we muddle through these problems of global growth, we think the yen becomes the carry trade currency again that everybody borrows. We don't expect the Bank of Japan to move out of this easy money situation, and Japan's still mired in deflation. We think the yen on a long-term basis is extremely overvalued against the U.S. dollar. Doesn't mean it can't continue to appreciate a little bit if we see a risk event. It's still moving well on risk. Next question, how important is the Chinese currency revaluation to the yuan, to the overall debt issues as regards to U.S. bonds they hold? Is this a huge factor? We don't think it's a huge factor. Sadly, we just say, where else is China going to go? And that's been the situation for a while. That will change as we see more and more advanced markets in Asia. As the emerging markets start to get deeper capital markets and real private domestic demand economies, this idea of holding Western paper will change in a very, very big way. But at the moment, it's a situation, China's not going to put that money into European bonds, that's for sure. There's no Asian markets where they can hide this stuff. So they really still are forced in the U.S. Treasury market, regardless of what goes on with the yuan revaluation. The U.S. knows that. It's really that mutually assured destruction situation. Question, are you familiar with John Pearson's views of seasonal trends? I'm not. I'm John Pearson's, I guess it is. No, I'm not familiar with that. I'm sorry, I can't answer that. Let's see. What do you see for the South African rand? We think the South African rand is going to be destroyed because when you look at and that's our guess, and it's a guess. But in terms of disclaimer, we've gotten hammered trading the South African rand. Every time we think it's about to break and get hit, it comes right back with the rest of the commodity currencies. It's like 25% official unemployment in South Africa. The ANC, African National Congress, we don't think can deliver on its promises. There's a lot of people that have ANC supporters that are getting very, very upset, living in incredibly awful conditions, which they have for years and years and years, hoping the ANC would be their savior. It hasn't happened. We still see massive brain drain in the country, and incredible crime, just crushing productivity and just scaring people out of the country. It's a very bad situation, and we think after the World Cup comes, could be the time to really get short the South African rand or long dollar rand as it's traded. But as the disclaimer, we've been very wrong on it lately, but we just don't see good things happening in the economy at all. Canadian dollar is at parity of the U.S. dollar. Will this continue over the long term? We do not think it will continue over the long term. Near term, if the global growth stays on track, the commodity currencies we think can remain supported, but ultimately we think they're fairly valued against the U.S. dollar, Canadian too. Once the Fed starts to raise interest rates, we think the relative value of the U.S. dollar on that chart that we show you will start to move. We don't think the dollar's even gotten into the strongest wave of the move yet. Ultimately, long term, if you look at the move in the U.S. dollar and we use that 92 to 2002 bull market, it rallied against all the commodity currencies on a relative basis. But even saying that, even if we're right on that, which there's no guarantee, even if we are right that the U.S. dollar does rally against the commodity currencies, we think that ebb and flow of risk is going to have a big factor, and we still like the commodity currencies paired against the European currencies. That's for sure. So we think generally in a growth world, the U.S. dollar can act more like a commodity currency. Which emerging markets will take hit if double dip occurs? Well, we think obviously the commodity tide. We don't think the Asian bloc currencies in the emerging markets, we think they'll be fine. And in fact, they performed very, very well during the credit crunch. But the emerging markets that we think will hit are those that are commodity-based, Brazilian real, Mexican peso, South African rand, for example. Those are the ones from the emerging market standpoint we think will be hit the hardest. Are there new FX micro futures liquid enough to trade? Don't know the answer to that. CME, you should be able to go there and see the volumes there. I think those micro futures are traded on those FX micro futures on CME. I haven't really tracked the volumes of those guys, to tell you the truth. Thank you, Mr. Chandler, for that. Talking about, he just typed in Pearson's view on seasonal flows out of currencies and into commodities. And it's definitely worked in here because we've seen a big boom in the commodities move if it's a pure seasonal from his standpoint. Just haven't seen that research. But we're seeing it. Obviously, the Canadian dollar got another big move today on we had the rate announcement. Bank of Canada did not hike rates, but made it clear they upgraded the growth of their economy and made it clear that they should be hiking rates sooner rather than later. So that's it's definitely made a big move. On an Elliott standpoint, if you're into that, and again we use it cautiously. On our longer-term basis, we can see the Canadian dollar maybe moving down to the 96 level when we look at, dollar CAD in terms of that move. And as you can see, even though we had a big move in the Canadian dollar and the Australian dollar against the U.S. dollar today, they moved even more against the euro because the euro was actually down against the U.S. dollar. So pairing the Canadian and the commodity currencies against the euro in this environment has paid off even more than and it's been very good against the U.S. dollar, obviously. So I'll try and keep that in mind. Question, does your newsletter recommend trading ETFs, other vehicles? Our monthly newsletter recommends trading ETFs, yes. Our currency that's our currency investor. Our position trader, we give recommendations on position trading, spot FX, and currency futures. We give the equivalent recommendation if it's available. We also do crosses in the position trader. And the swing trader is very short-term spot FX. So we do a lot of different things in a lot of different time frames on the currencies. We also trade the emerging market currencies inside the position trader FX and any ETF emerging markets that we like that are available. We trade those on an ETF basis.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.